Nitin Rakesh of Motilal Oswal Asset Management Company is now joined in to talk about where the markets could head from here. Nitin, morning. Thanks for joining in. Are you expecting some kind of a pause now? Because a lot of the news triggers have played out in the near term. Results, QE2, monetary policy. How do you read the next few weeks then?
Morning, Udayan. I think a lot of the news flow is already out, so we have no uncertainty regarding results, the quantitative easing program. Obviously, there are individual stock-specific triggers that will keep coming out, but I think at this point in time, markets digested a whole lot. Obviously, Coal India issue was a big trigger for the market in terms of just the way it got acceptance, and the listing was obviously a blockbuster one as well. So I think at this point in time, it's, our sense is that, we are back to being stock specific rather than looking at where the market levels are going to be. Obviously, we flirted with previous highs. We've, briefly crossed them and then obviously are hovering around the same levels right now. So I think it's time at this point to look back at, where those individual stock valuations are, which sectors have undervaluation versus overvaluation, not just compared to the benchmark, but also compared to the relative strength in each of those sectors from an earnings point of view. And then continue to look at, where there might be opportunities to construct the portfolios or restructure them going forward.
Nitin, morning. So what does one do with Coal India then? After the sprint that it saw in the first couple of days alone, you think the rally is done pretty much for the time being and the stock will pause?
It's a very hard call whether, the rally is done or not. So I think rather than take a call on what the price is going to do over the short term, I think most investors who either got chunky allocations in the IPO or even who try to get back into the stock because they didn't get enough, my sense is that it's actually a much better longer term play. There was a whole lot left on the table in the IPO pricing, and that obviously got discounted very quickly when the listing happened. So I think at this point in time it's probably closer to fair value, but that doesn't necessarily mean that we are done or there is no opportunity left in the stock. So I think it's a fairly good long-term story. We are very positive that it's a core holding at this point in time, given where we are from the cycle in the coal product per se, as well as the dominant position the company is in.
So at this juncture then, Nitin, at about 21,000 on the Sensex, if you had to go bottom up and really pick out those potential winners from here on, purely from the Nifty, what would they be really in terms of pure value from here on?
I think it's again hard to call winners at an individual stock level on the show, but I think what I can do is share with you some analysis that we've been running off late. So if you really look at the last 10-year trailing average valuations and compare them to the existing valuations at a sector level, and also compare the same with the benchmark, which is Sensex, you can actually find pockets of either contrarian play or undervaluation. So clearly, as a sector, cement is below the 10-year average valuations. Telecom is actually way below that, the numbers as well. Clearly there are other sectors like capital goods, engineering, real estate that also offer great value opportunities. So I think at this point in time, focus really should be to find the best opportunities amongst these sectors and maybe look at, things that may have overshot the valuation comfort range. So it may not be a bad idea to relook at things that have been really moving up a lot over the last, few quarters. So autos, banks, consumptions are all obviously, ripe from the point of view of looking at whether the valuations are justifiable. Maybe not every stock, but obviously, there are select stocks that may have overshot the valuation upside. So I think that's the way we are looking at it. Clearly, there are opportunities in the mid-cap space as well because, that has obviously not done as much, especially in the last, 3 months as the frontline stocks have done. So, it's always an opportunity to look at what might be, interestingly poised on that front as well.
That's interesting, Nitin, because cement has done well from a stock perspective as well. Yesterday, Ambuja was up 8%. The counter to that kind of logic, your rationale that you pointed out, is that on a replacement cost basis, maybe some of the frontline cement stocks are actually trading at fairly rich valuations. But do you think that earnings may surprise 2-3 quarters down the line?
I think even if you account for the recent run-up, and obviously yesterday was too recent for us to account for in the study that we've been doing for the last few days. But clearly from the point of view of looking at where relative valuations are, and obviously if you have to allocate a certain amount of money in the market, you look at absolute valuations, but you also look at relative valuations. And I think going back to your point about is the worst behind us. I think there is some school of thought and also some logic behind the fact that we may have seen the worst in the cement stocks from the point of view of earnings and margins. And I think at this point in time, if you can position yourself to play a contra game there, I think there should be good rewards maybe from a 12 to 18 month perspective. And I think we discussed this briefly on the show last time as well. So I think while the stocks have run up in the last 3 or 4 weeks, but I think again the contra play is in action there as well.